Good morning, everyone. Welcome to August the 1st Morning Bell with me, Richard K. Can you guys believe that it's August already? Surely boggles my mind. Don't know where this year's gone to. Sure as hell been quite a tumultuous one in the financial markets, that's for sure. So I still can't believe it. 4 months and it's the end of the year. But in any case, before we look at the markets I'm currently following, we are obviously going to look at the ES and the NQ, again at crude oil and gold, and also want to look at the 6E, the euro today as well. The potential trade setup that I'm seeing there. But before we do that, let's quickly discuss what's on the economic calendar for today. Not really much happening this week, a relatively quiet week ahead of us, except for Friday's job numbers, obviously, which will be potentially a volatile period. Apparently, Fed Chair Powell last week that we'll be keeping a close eye on these upcoming, important economic data events, and use that as a guide to decide what he's going to do with the interest rates in September again. So, yeah, like I mentioned, not much happening for the remainder of this week out of the US, that is, except for the job numbers on Friday. Okay, dokes, let's quickly have a look at the markets. The ES last week on Friday, before we close off that week, I said that potentially still going to see a move toward, I think it was a little bit lower, to 4,160, right? Now, that falls in line with this upper red warning line that's tracking this potential bounce that's either corrective or perhaps even in the beginning phases of a new uptrending market. Now that line's moved a day forward, so it's a little bit higher, currently residing at 4,165. So I think that the ES definitely has the potential to still move into that area. This little red line I have over here is at 4,204. This is now obviously for the September contract on the ES, where we have previous market structure. In this case of the preceding move to the downside, we had a lower high at 4,204. So I'm still thinking price could pull back, or at least test that level. We'll look just after the ES at the NQ. The NQ's actually tested previous market structure already. So in a bit of a tight range currently today during the overnight session. Prices be moving down a little bit. Potentially could find support around a 4,100-ish sort of level, where we have this upper red median line, what we call the upper 50% dashed median line. So I still think that we could definitely still see a move into 4,165, this upper red warning line, and potentially then, like the NQ's done, test that previous market structure at 4,204. On the daily, on the RSI, we're not seeing any momentum divergence at the current highs just yet. I just quickly want to bring up a volume profile. I'm going to run it from Jan's high to June's low. And you'll see that price has now made it within this high volume node that it's currently lying in at the moment. So quite often when you see price moves up or above, depending on what direction you're looking at, they tend to drop fast during these voids, or during these areas where there's voids, as we call them, or accelerate higher towards your upper node where there's a bit more volume, in this case around about 4,217. So price is hovering sort of around about that high volume node if you look at the indicator perspective of things. So yeah, I'm still thinking we could hit 4,165 pretty soon, perhaps even as soon as today. Slightly above that, like I mentioned, at previous market structure, 4,204. And also keep in mind that we have this downward sloping center median line here, which might still also act as resistance. So it all falls within this red zone that we identified last week. Right, so let me just get rid of that quickly. Clean this chart up a little bit. Let's go to a smaller time frame, 4 hour. Let's redraw this pitchfork sloping to the upside. That's from June's low. That was that high and a higher low over here. You can see how well price has been respecting this pitchfork, which is a shift pitchfork, by the way. Previous instances where price reached the, what was it, 4010-ish sort of level was also where it reached the upper median line, pulled back and broke above that area. So all targets that we mentioned last month and beginning of, well, last month, which is over already. I think when we started with service, we looked at starting in January, we were mentioning certain targets to be hit. I think it was 4015, and yeah, price surprised us even more and has since reached other targets. So one of the reasons I want to look at the 4 hours, I'm not really seeing any momentum divergence on the RSI just yet. So that tells me that we could potentially still see that move head up into 4,165. Just quickly on the smaller time frame while we're here. This move from this higher low has now extended more than 100% from this first move to the upside. And snap mode on again quick, and let's quickly bring out the Fib extension tool, and it is just shy of the 138.2% Fibonacci extension level using these anchor points, which is currently residing at 4,153, which is what I'm saying. I still think price will be drawn towards those areas and then have quite a few other resistance points that I just mentioned a few minutes ago up there. All right, so this leg to the upside from this low on the 14th of last month, nearly the middle of last month, it's now traveled nearly 138.2% extension of this first move to the upside. So it's starting to, and obviously by judging by the price action, it's starting to look like momentum. It's not drying up yet. I mean, like this is behaving, should I say, like a potential third wave rather than an A, B, C, which one would expect to end something like that if it was a single zigzag. But instead, we are seeing potentially this 1, 2, a third potential wave to run into those areas I mentioned before, potentially then a 4th and then a 5, building its way upwards, and then potentially see a decline with another move higher to follow. Not necessarily bullish just yet. You can in many cases see C waves extend 138 to 38.2% of your first move to the upside, but it is obviously a very good sign after price reached this important low where we said last month that, or in June, sorry, that we think that this was an important low, and thus far it's been behaving like that. It'd be quite cool if we can see this move to the upside reach 161.8 and perhaps even the 178.6 area, because then we're seeing a potential third wave incline rather than just an ABC. So I'm still bullish on the ES, but just keep note that we are running into upside resistance at the moment. Okay, let's move on to the NQ. Same thing here on the NQ. We mentioned last month that June's low was potentially also a very strong low. This after price pulled back into a low red warning line of a shift pitchfork. I quite like using shift pitchforks when I think I'm dealing with a correction. i.e., I've been saying for a while that I'm thinking this entire move to the downside might have just been a corrective move, with price potentially building its way up to the upside to make new highs again. Still far to go, and like I mentioned, a lot of upside levels that needed to be broken, or at least tested, and also on the NQ, those levels were reached relatively easily, and one of them was 12,980. And that's why I left you last week. It's like on 12,980 on the NQ was this previous market structure where a lower high formed. Now you can see on Friday last week, price on the NQ just tested that, and it's now currently hovering around that sort of same level over there. So we really need to see a strong breakout above that level to get up, or see price sustain, to see another sustained move to the upside, in my opinion, because we also have these previous lows that formed within this red zone over here. That price would need to stay above and close above, potentially even on a weekly time frame. So the other thing I quickly wanted to mention here was no divergence on RSI on the daily just yet, which is a good thing. But look at how well price has moved and respect in the confines of this downward sloping pitchfork, right? These angles that we're seeing over here. It's been dancing around beautifully. Support, resistance, resistance. Finally a break above. Pulls back to this low 50% dash median line. Supported the lower median line, and it's moving high again. So I think if we can just get a little more of a push higher, that we could easily see the NQ move towards the center median line over here, which is at 13,255 currently. Okay. So the NQ has already broke the previous market structure. The ES still needs to do that. Let's quickly look at the volume profile of this move to the downside. And you'll see that the other notable ledge on here is a little bit higher up on the NQ. It's around about where price nearly reached. A little bit higher, let's say at 13,000 sort of level, with your next important level up here around about 14,086. Quite a lot of work for the NQ to do to still get up there. But yeah, we'll obviously be tracking things closely over the next week or so, over the next few sessions. Just in the bigger scheme of things, like I mentioned, potentially that this was an ABC. Whoops. I'm just going to draw this roughly. And this was potentially similar to the ES, a very important low. And now price potentially making its way higher, and potential first wave of a much larger move to the upside. Right. But with price at current previous lows, the same on the ES, where price is running into market geometry, potential resistance lines. Yeah, I would say that we're potentially going to see a small little decline to the downside soonish, perhaps even this week. But, you know, structurally wise, price is starting to show early evidence that we potentially had strong lows on the ES and the NQ that formed on the 16th of June already. Okay. Crude oil. All right, so price moving lower, and here's just another great example of how price continuously respects these angular lines. We were looking at crude oil last week. I think it was sort of nearly hovering. This is this green bar there around these previous highs. It was set on the 19th of last month. And we were saying that this might have potentially just been a small ABC. Price in that stage reached the 101.87 level. I think it just did that. I think it actually pipped it with one tick. 101.88. And that line was just in line with this angular resistance line. That line's been on the chart for a very long time, and it's been rejected, and price has since moved lower. I didn't throw any trade ideas out there on crude oil just yet. For me, very messy price action. But I did, however, say that we potentially need to see a close below the 92.95 level. And I think if that happens, we're definitely going to see a fall in the test of, I won't say definitely, that's not the right word to use, of these lows on the 14th of last month at 87.64. And then potentially also this angular line. It's a little bit higher up than 87.64, but you know, it's quite often on crude oil, especially a volatile market, you can see price wick through an area and then respect it afterwards. So I'm still cautiously bearish over the short term on crude oil. In the bigger picture sort of thing, unfortunately, I still think that we're dealing with a potential A, B incomplete C wave, meaning that we can then see prices head back up again. As you'll see, and this is now in the September contract on crude oil, price has not broken below these previous lows. It was set in March and in April this year. So this recent low on the 14th did not break these lows. So price is sort of respecting this angular slope to the upside still, right? As price dances up and down between these lines. So I'm hoping obviously for more downside. I'm hoping that I'm completely wrong, that this is just an ABC. I'm hoping that this was some sort of first wave to the downside, second wave, and now price is actually building its way lower, 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 to give us some more relief to the downside on crude oil prices. I did also mention something else on Friday, and I've actually had a question about that by someone, is that this entire move to the side, well, it's sort of a large ranging sideways move, right? Could also be an incomplete triangle, although it's a little bit too early to say that for sure. Obviously can't say anything for sure in trading, but just knowing how these patterns tend to materialize, especially on triangles, let me mark that out for you. This behavior that we had a low, then a high that failed to break a previous high. We had another low that failed to break a previous low. Then we could be seeing a D and then an E, and then that ends, and then we see a move to the upside. But it's too early to say that you can't, like I say, your confidence levels that you're dealing with a triangle won't be that high until you think or assume that you might be dealing with a D wave. And then we identify an area where D waves typically end, and majority of cases they love respecting 61.8 and 78.6% FIB retracement levels. And that would be measured from a B to a C wave to potentially figure out where a D wave might pull towards. Prices just pull towards, let's say this whole thing does eventually turn out to be correct. All right, then prices only pulled back to 38.2. Nearly reached the 50%. Well, this 50% is sort of in line with this angular line that we're seeing that acted resistance before. But if we could see another move to the upside, and let's say price moves into either the 61.8, which is around 106.6, or the 78.6 retracement level at 111 and change, and we then see a decline, and that's at that stage where you're going to then start thinking, yeah, this is behaving more like a triangle would, and then you identify an area you believe an E wave might end, and if price pulls back into that level again, and you see a reaction upward, that's when you get into a triangle, in my opinion, and it might be a waiting game, guys. It might even take many months for this to materialize. Again, I'm not saying it is a triangle, but just this behavior where a high failed to break above a previous high, where a low failed to break about an important previous low. So there is some triangular behavior happening here at the moment. If that is the case, it will also potentially just be corrective, meaning that we can then get another move to the upside. But what I like about the triangle idea is that, just draw this out as a path, is that they tend to appear as your penultimate corrections in larger moves. I.e. might then, where's that other one? There. See another move, then pop these previous highs, and then see a much larger decline happen later on. That makes sense. All right. So yeah, still on the sidelines a little bit of what's happening with crude oil. I think over the near term, I'm still thinking we could head lower, and I hope crude oil moves lower. All right. That brings us to gold. Guys, going to be a bit of a short update today. I need to run directly after this, go fetch my son. My wife's stuck in another meeting, so I don't want him to stay too late after. He does have after school activities today, but yeah, she asked me if I can go get him. So I'll do that after gold and 6E. Yeah, where are we? We're looking at a 4-hour here in gold. Last week, price was sort of hovering around about this high that was set on the 29th of July. So that was last week. Sort of moved a little bit lower and has since broken above that high, and that was at 1784, and has since now made it to this upper median line of an upward sloping shift pitchfork around about 1790. It obviously went a little bit above that, around about 1792. So the thing is, I'm seeing here on the RSI, let's just bring that back, is momentum divergence starting to creep in on the RSI at that high. Price is also respecting this upper median line in the previous instance and currently reacting from it again, although I tested it, and on the next 4-hour bars trying to move lower. So potentially still difficult to say on gold, but since price has in the bigger picture, let's bring that back to the daily. Reached an important level, and I don't know why it's been deleted now. Thanks very much, Ninjacators. Sometimes let's try to find that lower again, something like that. Yeah, price came a fraction short of testing this lower median line of what I've been saying for a while. Could have been an ABC. And I don't think this is just a simple ABC. This is probably a very complex corrective pattern. I'm a little bit reserved to say exactly what it is. I'm more worried about the overall shape and where price pulls back into. And I don't know why it's doing that again. Bear with me, guys. BC, I'm going to develop my own tool one of these days. There we go. ABC. Price really came very close to testing this low median line. Potentially in a larger picture, a corrective move that has either ended or still needs one leg lower to go. Okay, so if you look at this pitchfork I've drawn, and again a shift pitchfork, you can see how price previously respected this market geometry line as well, using anchor points prior to obviously this move. And that's quite often what you want to see. You want to see price break market geometry lines, pull back towards them, and if you see a reaction, you can then, to a very high degree in quite a lot of cases, figure out which direction price would move again, because then price will potentially then move, in this case, to a low median line, which it nearly did. On momentum divergence, actually more prominent on the 4-hour than the daily. And if you currently look at this move to the upside, let's go back to the 4-hour. There we go. I just wanted to draw those market geometry lines on a bigger picture again. We're sitting with that 50% dash median line, which is the same angle as this lower median line, round about 1795. So if we do go a little bit higher, still be careful, that might act as resistance, but price has been testing this small pitchfork's upper median line as well, and it's been riding it a little bit, right, with momentum divergence. So we're probably there over the next session. We'll probably have a deeper or better idea understanding whether price is now actually starting to behave a bit more like a new start of an uptrend, or whether this is going to hold and price is going to break lower again, or whether this is just a corrective phase, i.e. potentially just an A, a B, and a C, something like that. Right, similar to the ES, this move here I think has now been moving far further than the range of this first move to the upside. Let's quickly bring out the fib extension tool. Yeah, not really just yet. We're at 100%. So this could also be corrective. I will become a bit more confident that this is an important low if price can start making its way to 138.2, higher even 161.8. Otherwise, this is just a corrective move. So, but on the sidelines, we are at resistance, or gold is. And like I mentioned before, guys, I really, on the bigger picture, want to see a 5-wave behavior. This move might just be a C wave because it traveled the same distance as this move to the upside, just a little bit over it, but it might just be an APC. Single correction. However, price moves to this 138.2 like I mentioned before, then it will start looking more like a third impulsive wave rather than a C wave. And if we get that behavior, then potentially a correction, and then we might get an even much larger move to the upside at a later stage. Okay. Right, guys, that's gold. And before we end things off, I did say I want to look at 6E. Euro USD for you guys that trade Forex. And obviously, as probably most of the currency traders will know, the dollar index has been extremely strong for a very long time. The Euro USD has been slaughtered, i.e. moving to the downside very strongly. All right. But what I do like about this potential setup here, or what I would say a directional bias, is that I'm thinking we might have a little bit of a higher bounce actually on the cards for 6E. What I quite like doing, and this is obviously for traders a little bit more experience, if you do trade counter trends and you're comfortable doing that, depending on your time frame, obviously. If you're a scalper, whatever the case might be, then you're more than happy going against what the larger trend might do. But what I'm seeing here currently is that the 6E is respecting the centimeter line of an upward sloping shift pitchfork. Yes, it wicked above it a few times, but it's failing to close above it. So if we can see it close above this level on the daily, then if you draw a shift pitchfork from this low on the 14th of last month to this high on the 21st to this higher low on the 27th, then I think there's a good chance that price, like you've seen in behavior from the other markets I've shown you before, that price could be pulled towards this upper median line. If this is a stronger higher low, then this move to the upside is still well short of running 100% of this first move to the upside. Like that, right? But these market geometry levels, if you use pitchforks, generally work really well with price gravitates towards them. So potentially if we see a close above this area, maybe even on a 4-hour time frame, I think we could see a pop higher into 1.03860-ish and potentially even higher into this zone that I marked over here. It's 1.0422 to 1.0480. That is obviously important resistance on the upside, just because of previous lows that formed within that same region. Won't be surprised if our price actually goes back to test those levels. And yeah, or at the very minimum, like I said, a close above, let's say, the centi-median line, which is currently at 102.80-ish, we might see that pop higher again to 1.0386. Right, guys, that concludes today's little session. Again, it is August. We've all made it to August. Only a few more months to go, and it's December. Like I said, I can't believe it. But in any case, always great being here with you guys. I hope you had a fantastic weekend, and I'll be back again on Wednesday Same time, same place. And yeah, we'll see you then. Thanks very much for watching. Until next time, take care and goodbye.